Greetings, traders. This is Sam, the Trader Geek, with your weekly review and preview for Sunday, August 18th. Hope you're having a great weekend. And let's get started and take a look at the week that was. And somehow or another, this got on the wrong page. Here we go. So, starting out by looking at the performance of the major markets since the August 5th debacle, and these are sorted by performance. Obviously, the best performing major market has been Bitcoin in terms of the IBIT measured, and then Magnificent 7 up 10%. The Qs a close 9.11%. SPY's up 7% from the close on the 5th, and VTI is kind of the world ETF, kind of everything. The diamonds or the Dow Jones up 5%, closely followed by the small caps. So the only thing that's really down of any significance is the VIX down or crashing 61% in a historic reduction in volatility. TLT not faring too well, just down about 1.38%. And overall, the aggregate bond index is down 0.13%. Dollar is surprisingly unchanged as measured by the UUP. So I guess that's a good thing. And HYG, which is the high yield bonds, generally trades in correlation with the stocks, since they are very much stock-like, but only up 2%, with gold up 4.22%. So good recovery off the bottom, running into resistance and looking better than one would have expected, so to speak, at this point. I'm going to bring up the PIP market tool. I'm having a little connectivity problems. Show you Friday. And overall, we started out lower on the day and closed slightly positive for an options expiration Friday. Not bad. We eked out a small gain with all the, it was kind of a nothing day actually for an options expiration, but we'll see what that brings for Monday. ARKK being the strongest of the major indices, with the SPY and the DIA kind of up about 20 basis points. So everything looking good last week. Yeah, there's a problem with the connectivity on the data, so I can't show you that. I apologize. And then if we take a look at Friday's action, so these have gotten worse than earlier today. I had more data here, so not giving me a whole lot of information about performance of the particular industries, but I guess cannabis and gold miners were up the most on the day. China was up 2.1%. And one of the things I don't know if I've highlighted yet for most of you is kind of the exposure of the National Association of Active Investment Managers. On the 7th of August, just a couple of days after the big drop and spike in volatility, they had 75% exposure, and surveyed last week, they were down to 56.6%. So that was a much bigger drop in terms of their exposure, 18.8%. And I got to believe that when the survey comes out for August 21st, that this is going to bounce right back up. So kind of tells you what kind of environment we're in, where we go from 83 to 75 to 56. And my guess that this is going to be back above 70% when we get this week's sentiment survey from the active investment managers. Taking a look at other weekly markets, taking the lead obviously is the NASDAQ 100, and microcaps doing pretty well. So everything green on the week. We can see that we still have red on the month for microcaps and the small caps. So the smallest of the capitalizations are down. Even the Dow Jones down a little bit, but finally trying to get towards eking out a gain. And then we only have the NASDAQ, surprisingly, on the quarter That's down a little bit, and year to date, we have the S&P 500 and the NASDAQ up in the winner's circle, so to speak, and with the Russell 2000 only up barely 6%. Taking a look at some charts, and I thought I asked it not to kind of scale this, but here we go. Qs, you can see these charts of the major indices and how much they've recovered. And so obviously we're coming up to resistance here. Same here with the 1Q. Here is the recovery on the micro caps, not as much as you can see mid caps as well. DIA is recovered really nicely, coming up on a resistance point up here, and obviously the IWM not as much. And I want to thank Charles Kirk, who puts together these charts and allows me to use them in my video here. Taking a look at sectors, technology taking the lead, obviously consumer discretionary with the help of Amazon and Tesla, up 5%. Nothing down on the week. So real estate kind of bringing up the rear, down 0.1, up 1 point, up 12 basis points, he tried to say. And on the monthly basis, consumer discretionary and energy kind of faring the worst so far, with 2 trading weeks to go essentially in this particular month. Materials down 1.7%, but technology and energy so far this quarter are the only down sectors so far, but lots of time to catch up as we still have the rest of August and September. We're kind of in a mid-quarter state right now. But as you can see that taking the lead actually is utilities for the year. Communications, I guess, is a little bit more, and utilities kind of second place, but surprising to find utilities ahead of technology on the year, and financials up 16.4% with real estate and consumer discretionary bringing up the rear in terms of sectors. Taking a look at some charts here of the sectors, you can see kind of the recovery. You might pause the video if you want to see this coming up on resistance in the financials. XLV has broken above the highs here, so defensive sector. XLU, same defensive sector, above the former highs. Same with the XLRE, XLP. All of these defensive sectors have recovered and then some, with the rest doing pretty okay, but not as well as the rest of the sectors, so to speak. Taking a look at industries, we've got lots of green on the week with the social media kind of bringing up the rear. Nothing in the red, surprisingly, in terms of these major industries, but we can see that on the month, alternative energy is not doing too well. Oil services down double digits as well. And quarterly, we're improving. Airlines faring the worst so far this quarter with social media. And surprisingly, the social media does not include Google. It does not include Meta. So not sure what they define social media in that particular group, but it's lesser known stuff like Baidu and YY and other less obvious social media sites. Semiconductors, clear leader on the year, up 41%, with gaming, esports pretty close to each other, but a far distance from semiconductors. Gold miners in second place, up 24%, having a really good day on Friday, breaking out with gold breaking out. And if we look at the worst industries on the year, price goes to alternative energy at down 36%, and solar down 23%. And here are some major industries and what their charts look like. And Defense and aerospace back up here. Looks like it's trying to break out of that range. IHF being healthcare, Sky, internet-based betting sites here. All you can see the recovery, FDN, internet sites, esports right here, and gaming here. You can kind of get an idea of the extent of the recovery by kind of quickly glancing at these charts. If we look at the bonds and how they're doing, zero coupon bonds were the winner. Everything was a little bit positive, although short term did not do as good as longer term. So we look at the TLT, it was up 1.23% on the week, but the 1 to 3 year treasuries are only up 0.07. Oddly, what was first last week is last on the year to date. Zero coupon bonds are down 4% on the year, and emerging market bonds doing the best so far this year. So they've been holding up pretty well, and I think that's also a factor of the dollar not showing a lot of strength year to date. If we take a look at styles, and this is something that interests me as a portfolio manager, I like to know what particular styles are holding up. And obviously, year to date, nothing comes close to large cap growth. And it also was a champ again last week. None of these styles coming even close, with mid cap growth kind of in second place year to date. And if we look at large cap value, that's next in line with small cap growth, just behind it. But small cap value, kind of the laggard, barely positive on year to date basis. But you can see here on a monthly basis, most everything is still negative in terms of style of investing, except large cap growth. So you know where to invest. Taking a little bit further, if you look at factors, these are different types of funds that emphasize certain factors, and you can pause this here. But clear winner, momentum is the clear winner this week and year to date, up 35%, with growth also in second place here and also in second place on a year to date basis. So when you look at the emphasis here, growth at a reasonable price, only up 4.36%. And if you're kind of a pure value company, only up less than 5% on the year. So it's at least interesting to me, but you're seeing a lot of green this week and a lot of improvement in terms of these. And one of the things that kind of surprised me is that with momentum and growth doing so well, that high beta could be lagging so much. It was great last week, but on a year-to-date basis, less than 3%. So having extra oomph did not help you on a year-to-date basis. Magnificent Seven, pretty much 6 out of 7 were Magnificent. Alphabet with some legal troubles, down slightly, but NVIDIA, the king, putting up 19% last week, with Tesla gaining 8%, and Amazon finally busting the move, up 6%, and Apple 4.5%. On a monthly basis, we've got 5 out of the 7 positive, or 4 out of 7. And then on a quarterly basis, we have 4 out of 7 as well. But year to date, nobody even comes close to NVIDIA. Tesla still in the red on a year to date basis, but the rest up double digits, with Meta a distant second from NVIDIA. And if we take a look at something that Charlie put out, Charlie Bilello puts out lots of great information on Twitter. He's showing kind of the gains on these major stocks since the August 5th panic lows, and clearly NVIDIA is the leader, with Meta in second. The Nikkei, or the Japan 225, being up 18%, and so was Tesla and Amazon. So kind of interesting way of seeing what everything is been doing since that panic low on Monday the 5th. If we take a look at crypto, on the week, Bitcoin losing a little bit, as did Bitcoin Cash, Litecoin down, up 11.21%. But on a monthly basis, they're all down, and on a quarterly basis, they're all down. So kind of going through some consolidation here, and year to date, Litecoin is down. So kind of first shall be last here, with Bitcoin clearly the leader, and Bitcoin Cash even beating out Ethereum, surprisingly. But again, in a consolidation phase for Bitcoin. We'll come back to this one. So I wanted to take a look at kind of the charts last week, and we're looking at a daily SPX chart, and clearly here's the bottom on the 5th, and we've been one time framing ever since, and what that means is that no low of one day undercut the low of the prior day. So you can see it clearly uptrending and holding up very well. We're above the 50-day, we're above the 21, and we're above the 8. So clearly above all moving averages. Getting into this resistance zone here, so we might see a little backing and filling. Hopefully we do. We need a little bit of rest here so that we don't continue to go straight up and subsequently go straight down. If I add some drawings, I know it makes it a little messy, but let's take a look at some of the observations. When we look at the line here, the implied move for the week ending 8/16 was at 54.66. And so by far, we took out that expected move almost by 100 points. So last week, the expected move was plus or minus 120 points. And we did 200 points last week. So again, it augurs for the fact that you want to be a buyer of short-term options. You do not want to be a seller. If you had sold short-term options last week, you got run over, and run over badly. And so we did exceed it by about 80 points. And obviously the lower end of the expected move was down here, and we never even got there. So let me remove that, and then remove the one for last week, kind of making it cleaner. So the implied move for this week is about 74 points. Compare that to last week's expected move of 120 points. It's about 38% less. So we are expecting a downside expected move at 54.79, and if we come up here, the upper edge of the expected move next week is at 56.29. So there's your expected move, the close being here. And again, with Jackson Hole this week, and we're going to look at some of the economic data coming out and some of the earnings. And I think we have minutes from the last FOMC meetings coming out. You definitely don't want to be a seller of options. You want to be a buyer of short-term options. I think 74 points is woefully inadequate for the kind of volatility we might see this coming week. Let's take a look at the same chart on the NASDAQ. Here's where we settled. This is a daily chart. Get rid of the drawings for a second, and you can see that we're right on the 50-day right here. And again, another one-time framing up from the bottom on August 5th, looking good, coming into congestion here. So we could expect and hope for some backing and filling. And 18080, or this is a ATR trailing stop here, where if triggered at 19,866, that could send us on our way back to the old-time high up here, but one thing at a time. And if we put back the drawings and see kind of the expected move, Again, we were outside of last week's expected move by a mile. Last week's expected move was 19,042. We closed at 19,508. Again, over almost 500 points outside of the expected move. So you don't want to be a seller of short-term options. And if we look at this week's expected move, it's right up here at 19,902, so about 400 points. And down here is the lower edge of the expected move. Again, I think that's not going to be adequate. So let me remove last week's expected moves and take a look here. So that's the NASDAQ 100 index. Take one more look at the Russell 2000. Again, recovering not as much, has a little bit more work to do. We have a parabolic stop and reverse here on the Russell coming up very closely. And if we can close above that, that gives it more room to kind of close this gap here. And hopefully we see that the MACD is starting to curl over and wanting to cross over, and RSI nowhere near overbought. So we're in good shape there. Taking a look at the SPX, and like I said, about 75 points, 74 points expected into the end of the week. And also like to look at the VIX. And here we are from the highs on the 5th. We've collapsed under 15 when all was said and done on Friday. So clear crash in volatility, and MACD bearish. And on a weekly basis, you can see here, we basically took out the last 2 weeks low, and we're sitting down here on a 3 week ago low, so to speak. So volatility telling the story that it's looking okay, but not all clear, because I think we do need to do some backing and filling and start resting a little bit before we go higher. I think that would be good for the market. But what I think is good and what the market does are always and usually two different things. If we take a look at the VIX, we closed at 1480, and let's call it 15. And if we go out $1 out of the money on the call side, then we're looking at about $1.59 for the calls. So if you're bearish on the market, you're buying calls on the VIX, and that's $1.59. And if you're bullish on the market, you're buying puts on the VIX, and that's at 14. That's only about 49. So let's call it 51 cents. So the options, the call options, are at least 3 times the put option. So that tells you this difference is growing as I keep track of it on a daily basis, and tells me that they're buying some protection. And with VIX calls, multiples of VIX puts, there is some concern, and rightly so, with Jackson Hole and what might come out of there this week, and the fact that we've come pretty far from the lows. And this is an options expiration for the VIX this week. They expire on the open on Wednesday, so they have 2 trading days left. And you can see even here, if you go out to the 16s, they're trading still for about 37 cents. And you go to the 14s, and there's no bid. So whatever time frame you pick, you see that the VIX is pricing in a little bit of shake and bake, so to speak, but nothing too terribly concerning just yet. This coming 2 week period ahead of Labor Day tends to lean bullish seasonally. So you could see a continued melt up, and maybe we get a 1 day shakeout and continuing on the upside. So certainly the bulls have the advantage here. Looking at the economic calendar, nothing really of market moving going on Monday. Leading indicators e-commerce retail sales. But a lot of Fed heads yakking. Chris Waller on Monday, Michael Barr, Ralph Bostic, no economic news on Tuesday, FOMC minutes on Wednesday, and then Jackson Hole Symposium starting on Thursday, but the real fireworks comes on Friday when Powell speaks, and we get new home sales on Friday at 10 a.m. And then we have our usual jobless claims and Chicago Fed and existing home sales on Thursday. So we do have some news here. A lot of bond auctions, but basically they have not made a whole lot of difference over the past few weeks relative to jobless claims and CPI and non-farm payrolls. Looking at earnings, we're winding down, but just because we're winding down doesn't mean we don't have a lot of good names of note. Palo Alto Networks Monday after the close. Tuesday, we have Lowe's following on after Home Depot's earnings last week. Futu, Toll Brothers as well, Medtronic, well-known names. Wednesday, we have Target reporting before the open, as well as TJX, Macy's. So this is kind of like retail week reporting. We'll see how their numbers come out relative to the retail sales number that exceeded expectations last week. ADI, Analog Devices, and Zoom and Snowflake after the close on Wednesday. Urban Outfitters, another retailer as well. And then on Thursday with Baidu before the open, Advanced Auto Parts, BJ's, and after the close we have Kava and Workday, as well as Intuit and Ross Stores. Nothing really of significance on Friday. So in a nutshell, we've had a very positive uptrend from the August 5th bottom. There has been really no backing and filling. If you look at this SPX chart, it's been straight up. So we could really use some of that, and consolidation here would not be surprising. And so rather than scream higher, hopefully we'll move a little bit sideways and then start moving. But that's the thing with strong bull markets. They never really let you in or let you in safely. So you got to be paying attention and picking your spots to do so. So you're either bullish or neutral, and it looks like the SPY is where the action is, or SPX, whereas and then the NASDAQ as well. Hopefully the small caps can play catch up. Well, that's all I have for you today, and I hope you enjoy the rest of the weekend. If you have any feedback on this video or anything at all, at Trader Geek on Twitter or Trader Geek Sam in the forum. Have a great Sunday, and I'll see you tomorrow. Bye-bye.